If you want to give us a little love, we are a 501c3 nonprofit, so your donations are tax deductible. Skeptic.com/donate. And that supports the podcast as well. So my guest today is Andrew Chow, the correspondent for Time who covers technology, culture, and business. He's written 4 Time cover stories, including about the subject of today's podcast on Cryptomania, including about the impacts of the AI corporate arms race and a prescient profile of Vitalik Buterin, I think it's pronounced Buterin, months before the 2022 crypto crash. He's previously written for the New York Times, Pitchfork, and NBC News. Here's the new book, just coming out, Cryptomania, Hype, Hope, and the Fall of a Billion-Dollar Fintech Empire. All right, we're going to have to break all this down because this is one of those topics that people go, what is that crypto thing again? Andrew, nice to see you. How'd you get into all this stuff? What's your story?
Thank you so much for having me. I've been a journalist for a long time now, and I've been at Time Magazine for 5 years. Often I write about the intersection of culture and technology and how those two forces interplay. Over the pandemic, I started hearing about this thing called NFTs, which was supposedly shaking up the art world in an unprecedented way. I had downloaded the app Clubhouse. I don't know if you remember it.
I remember
It was an
Clubhouse.
audio-only app that
Yes.
was absolutely enormous, sort of in the fall and winter of 2020. People joining these audio-only rooms to discuss all sorts of things while they were stuck at home. Basically, every day I would log on and find that it seemed like the majority of the conversations were about NFTs. And you have this strange mix of bedfellows of, Uber technologists and avant-garde artists and venture capitalists who are all in these spaces talking for hours on end, beaming in from Korea, from South America, from Texas, just talking about NFTs, how they're going to transform first art but then supply chains and then governance and the crypto folks call it, falling down the rabbit hole. And that was absolutely my experience, sort of in those pandemic days. It was a very zany, very seductive idea for a lot of people who came into it at that time and sort of witnessed this magical, meteoric, and then spectacular crash that happened a couple years later. Obviously, we're a couple years removed from all of that, but I still think this crazy crypto period over the 2 to 3 years there, that bull run, has a lot of lessons for where we are now.
Yeah, NFTs, non-fungible tokens, right? We'll get back to that. Yeah, Clubhouse. I do remember Clubhouse. Somebody saying you got to join. This is the next Twitter. Because back in 2007, when one of my friends said you got to join Twitter, I'm like, what is that? And so I did, and it turned out to be a big thing. It's like, okay, I guess that was a good idea. And so I joined Clubhouse, and it's like just chiming in to listening to people just yak it. It's like, my day is just wasting away here. At some point, I got to get back to work.
And people would spend hours just waiting to talk. Like you could spend 3 hours waiting to talk and then deliver, because everybody was so hungry to deliver their little monologue or whatever it was about. We were all sitting in our rooms. People were just desperate to be heard, to find community in different ways.
Right.
And I love the formulation that you just said of like, oh, it's the next Twitter. I found that in that era, when it came to crypto, almost everything was the next thing. Like crypto was going to provide the next Uber, the next Facebook, the next, stock market even. And yeah, it was a lot of just unbridled optimism coming out of the space.
Now, your involvement in this was more objective journalistic investigation, or did you also have a personal interest in any of this?
I think I came into it pretty new, and I was genuinely really personally excited when I would read articles about it. The idea that the blockchain was going to transform so many of our systems, the underlying systems that make the world tick. I think one of the central reasons why crypto continues to be so persuasive is that it's arguing against a status quo that most of us agree has major flaws. And I'm talking about a global financial status quo and a a status quo in terms of the internet and big tech. Crypto basically threatened or promised to dislodge all of these uh, very powerful, problematic systems that people on both sides of the political spectrum saw as fundamentally broken. Crypto itself emerged out of the 2008 financial crisis as a sort of rejoinder to the way that the banks wielded their power. Um, so that was really interesting to me personally, and also from a journalistic standpoint, it was absolutely the best story of 2021 because of one, how horizontal it was, how many parts of the world it touched, and the characters. My God, the characters coming into this space were some of the most audacious, big thinkers, for better and for worse, who promise all sorts of things. So I think it was really interesting personally, because I wanted to believe that there were big technological solutions, and then from a journalistic standpoint, it was just the place to be.
Yeah. I see this as something of a signal detection problem. There's a lot of noise out there. You want to find the signal of the next Apple computers, the next Google search engine, the next Facebook or whatever. If you're an investor or if you're just a regular person that just wants to grow your money, you don't want to miss out on that. The problem is there's 100 of those people claiming we're the next Apple, we're the next Facebook. How do you know which is which? And it's like that. What's the name of the company? The Bad Blood company with the
Baroness.
female.
Yeah.
Right. And what was her name again?
Elizabeth Holmes.
Yeah, Elizabeth Holmes, right? Yeah, she's the next Steve Jobs, And so when you kind of look at the stories, the backstories, all these investors who kind of didn't do their due diligence when they should have, kind of got swept up in that. Yeah, I don't want to miss the next Apple computer. She looks like Steve. She wears the turtlenecks just like Steve Jobs. It's got to be good.
And that brings us straight to basically the protagonist of my book, who is Sam Bankman-Fried. Sam
Yeah.
Bankman-Fried was supposed to be the next Mark Zuckerberg. Now he will be known as the next Elizabeth Holmes, for the image that he put forth, the big promise he made about crypto, and the fact that most of them were false. But yeah, going back to the VC thing you were talking about, it is a lot of this raises a lot of questions about just the way VC works, I think. There are folks who know way more about this than me, but from what I understand, VCs, they're in the business of taking a lot of swings. They take a lot of swings, investing money in a lot of projects, knowing that a lot of them are not going to work out. And when one of them hits it big, then they can say like, "Oh, I told you so. I'm a future teller." And during this time, just there was so much money flooding into crypto because these VCs were taking a lot and a lot of swings. There was so much hype, there was so much mainstream interest flooding in, and it was all feeding on each other into this enormous amount of money rushing into an untested and mostly unregulated space.
Yeah. Yeah, just a funny backstory on that. My friend David Cohen, who is a venture capitalist, he's at Bessemer and something in Silicon Valley. Anyway, I asked him about this, the signal detection problem. How many do you fund? How many end up becoming, the next big IPO and you make the gazillion dollars? They said, okay, let's say we hear 100 pitches and we fund one out of the 100, in which we give millions of dollars and they're off and running. And then of the 100 that they fund with the millions of dollars, one becomes the big thing that pays off. And then not all of them fail. A lot of them just kind of struggle along and they barely make a profit and pay their employees and so on. And then, a lot of them just go out of business. The survivor bias, right? I call that the biography bias. When Walter Isaacson wrote his Steve Jobs biography, everybody, kind of scraped through it like, what's the secret sauce? Okay, you go to an elite liberal arts college, you drop out, you move back to your parents' house, and you start a company with your buddy in the garage. And that's it. You're off and running. It's like, okay, how many people in the 70s did that and they failed and no one writes biographies of them?
Yeah. And I think what crypto, so we've seen several waves of crypto. We're in another one now. And each sort of bull cycle offers the opportunity for another 100 or 1,000 of these aspiring Steve Jobs to come to the fore and say, "Hey, I have an idea that's going to change the world." And they get lots of attention. And a lot of sort of retail investors get swept up in the mania. Now, I guess the smart investors understand a lot of these are going to hit. a lot of these are not going to hit. In fact, 99% of them will not hit. But that becomes a problem when NFTs as a whole are sold as this sort of democratizing force, where artists all over the world, all of them are going to be able to forge sustainable financial pathways to exhibit their work worldwide, or for filmmakers to get funding, or for musicians to be able to fund their next album with NFTs. There was this sense that, I mean, the rallying cry of the era was "WAG me," so which stands for "We're all gonna make it." You go on Twitter and you would see GM, good morning, WAG me, we're all gonna make it. We're all in this together. We're all lifting ourselves up by a giant bootstrap, and we're all going to make it together. And obviously, that was really naive. Yeah.
So last weekend I was at Freedom Fest in Las Vegas. This, you're probably familiar. This is kind of the libertarian conference. Gold and silver and guns are really big in the exhibition hall. And the director, Mark Skousen, I speak there every year. He pays me in gold coins. Here's one.
Oh.
It's the Liberty. You can't quite see the details, but there's a eagle on one side and Lady Liberty on the other side. It's 1 troy ounce of gold. I just checked this morning. It's like $2,400, but it says $50 on the coin itself, right? So what's it really worth, right? So just let me riff on this for a second. I have an 1884 silver dollar that my father gave me when I was like 8, right? Keep this. It's going to be valuable. Okay. All right. So now I have a $20 bill here. Okay. Is this $20 bill backed by gold? No, it isn't. So what makes it valuable? The government says it's valuable. It's fiat money. The Fed, I trust. Everybody says it's good, right? And same thing with I have plastic in my pocket. I got a Wells Fargo, I got a Visa MasterCard, I have a metal American Express. Oh wow. But I'm just moving binary digits around on the screen. Where's the real value? So this is the argument the crypto people make. This is just the next step. All right, so walk us through, what kind of money is this? What are we talking about? What is money anyway?
It's very easy to start asking these questions and then get very existential about it, as you just said. Like, what is value? Where? And this is, as you just mentioned, one of the primary things that Bitcoiners say is like, well, the dollar, it's basically a shit coin too. Just some guys created it. They spun up a new country. They spun up a dollar. And it took a long time for it to be accepted. So Bitcoin is going to do the same thing. There are obviously technological strengths that Bitcoin have, and it's very easy to spend 5, 20 minutes or 3 hours detailing like how the blockchain works, why it's a stronger system than some of the systems we have. I guess the nuts and bolts is that it's sort of a decentralized ledger. It's not controlled by the Federal Reserve. No one can turn on the money printer and demand that more Bitcoin be made or withheld. So that's supposed to be better for inflation, more resistant to inflation, especially in this like crazy era. I think that has yet to be determined. But I think it does go back to just a fundamental idea of value coming from belief. So we believe in the U.S. dollar. It's backed by the Fed and the U.S. government, who say that it's valuable, and we collectively believe it. And that's based on centuries of America being a resilient country, as well as the U.S. military and the sort of global financial system that often organizes itself around the dollar in different ways. So these are deep, deep roots that are now sort of deeply implanted in our systems and our psyches. We've seen how, other countries, especially new countries who try to have new currencies, their currencies are much less stable. They don't hold their value at all. And so am I discounting the idea that at some point the idea of Bitcoin's resilience, Bitcoin being digital gold, could work its way into our consciousness so that it's indisputable, it's possible? I think we're a long way from it at the moment.
So, in other words, it's something of a collective action problem in which if enough of us get behind it, then it is valuable. So is one of the arguments from the crypto people is we just need to get momentum and get enough millions of people. Like I remember a couple of years ago, Elon was tweeting the Doge, the Doge was his
Dogecoin, yes.
Doge was his preference, and he has such a huge following. I think he was hoping maybe we'd get some momentum here, and you hit a tipping point at some point where now it really is because enough people think it is.
Momentum is so central to crypto. It's so important to everything that happens. Sam Bankman-Fried once actually said that he said crypto was like a collective fiction we're writing. So he kind of acknowledged that, especially with these smaller coins, they start from nothing and they gain steam from memes and from interest and from people putting their money into it. Um, I had a point where I was going with this.
Well, let me just make what you're thinking about that, make an analogy with the stock market. When I buy and sell stocks, I mostly don't look at the details of the company and their price earnings ratio or any of that. I just think about what is everybody else worried about. So, Elon smokes a joint on Joe Rogan. I think, uh-oh, I better sell some of my stock because it's probably going to crash tomorrow. Why would this affect the company? I have no idea. I'm just worried that everybody else is going to do that.
And Elon himself is sort of testament to how narrative is so important to value. And you think about the value of Tesla being beyond just how many cars they sold at a specific time. One of the reasons Tesla really soared over the last 4 years is the aura around Elon and the belief that all the potentially like groundbreaking things he's going to do by all of these, investors all over the world. But I remember the point that I was going to make was that um, because there's so many people in crypto who are just singularly focused on getting enough momentum to get off the ground, um, I believe that sometimes that focus comes really at the expense of the long term stability of the whole industry. And I think my book Cryptomania is basically a story of that, of how crypto as a whole was so desperate for the number to go up, for them to gain mainstream adoption, that they basically let the wolves in and let the industry be run by sort of like these deeply craven and unstable people like Sam Bankman-Fried, who really didn't have crypto in mind at all with what he was doing. Crypto was just a tool he was using for his own ends. But because he was such a persuasive and powerful figure, and he was helping crypto get to the Super Bowl, get, into mainstream consciousness in a way that it had never had before, crypto is like, well, the mind game is central to this thing. We need people to think we're valuable. Sam is helping us get there. So we're just going to mostly support him and maybe not really question if what he's doing is good for us in the long run.
Yeah. At this Freedom Fest conference, there was a debate on crypto. And on one side, the critics were John Mackey, the CEO of Whole Foods, no longer because he got bought by Amazon. And then Alex Green, who's a friend of mine who runs a investment company, and he's a financial advisor and so on. Their argument was that not only is all the problems with the money issues we just discussed, but there's no goods or services. What's tangible? That was their argument. The two crypto guys, they said, "Oh, you're only focused on the money part." And now, mind you, they're speaking to a libertarian conference that thinks the government's going to collapse at any moment, and we're all going to start over, and big government, Big Brother's listening to. They go, "This is way more than that. This is a whole new system to avoid surveillance and government control. It's going to lead to freedom and liberty and autonomy. We've never had the technology in history for so many individuals to be free from government restraint and so on." There was that narrative there.
Yeah, I think it's always so important, for me anyway, to look at the delta between what crypto could be and what it has been so far. And not to say that what it has been is what it always will be, but people are free to make all sorts of amazing claims about how this blockchain technology can forge all these better, freer systems in the future. And it's sort of my job, I feel, as a journalist to hold those promises to account to see how are they getting developed, how are they getting rolled out in the real world, and how far is that delta between what is being promised and what has resulted. From what I've seen so far, the primary strain of how crypto is being used in the world is basically gambling. There are amazing other use cases that should be talked about, and we can talk about them today. But most people are just using it as a giant platform for speculation, in a way that isn't different from the speculation that's happened over centuries of capitalism. So, is that crypto's fault? Is it the fault of the underlying technology? I'm not sure. Is it the fault of just the way that financial markets work, or our psychology today? I don't know. But that's how it's played out so far.
Yeah. So is it equivalent to something like the South Sea bubble and the tulipomania that the other John Mackey wrote about in Charles Mackey, sorry, in Extraordinary Popular Delusions and the Madness of Crowds, one of my favorite books. All the way up to the dot-com bubble in the late 90s that blew up, and then the housing bubble in '08 that blew up. It's something like that. Go ahead and make parallels or differences if you like.
This is one of my favorite books. It's called Devil Take the Hindmost by Edward Chancellor.
Right.
It's a history of financial manias. And I found it really instructive while I was writing this book to take a step back and look at 2, 3, 4 centuries of manias. Basically, he contends that manias basically always occur around revolutionary technologies. Whenever there's sort of a new technology that breaks through, a bubble forms and we're talking about the machine gun or as you said, the South Sea bubble. I mean, the railway system, and then going to the internet. You see something that's new and potentially powerful, and all these speculators rush in. And sometimes that's actually really good for the technology because it serves as financial rocket fuel for the infrastructure. When you think about the internet, like the dot-com bubble of like the infrastructure of the internet being able to get laid out during the 90s so that to reap the rewards afterwards. But I will say the other side is that there are also bubbles that form around things that promise to be revolutionary technologies and just simply are not. And they're sold as revolutionary, and then they just wither away. And we're talking literally in the case of tulip mania. I think one of the great parallels there is the creation of derivatives and sort of like all these financial assets during tulip mania, where people weren't betting on they weren't trading tulips. They were placing bets on like bulbs that were in the ground that had not come out yet based on what strain they had and how rare it was going to be. That's like a really fun parallel to NFTs and their rarity and the amount of sort of speculation around derivatives and futures that was happening and continues to happen now. Another one, there was like supposed to be all this new equipment for deep sea diving to unearth shipwrecks that were just filled with gold, machines to take us to the bottom of the sea to make all these investors rich. So it's crypto's favorite narrative to be like, the internet was dismissed. There was a bubble then. We're the new internet. And now we're seeing that with AI as well. We like both industries jockeying for a position to say, we are the new fundamental layer of the internet that's going to rewrite how we interact with the world. But I'd say there's some truth to the argument, but it's also fallacious to assume that, just because the internet did it, then crypto can do it as well.
Yeah. Again, signal detection problem. You don't want to miss out on the real one because there are real,
Yes.
increases in profits to be made and so on. Bubbles that turn out to be good for a while, at least the people that get in them early. When the Elizabeth Holmes story broke, I initially thought maybe she's being unfairly treated because she's a woman in a male-dominated tech industry and so on. And then there was the narrative that, well, like Steve Jobs, you kind of sell the hype first, you fake it till you make it, and then you make it, and everybody's happy. And I thought maybe she wasn't lying, intentionally telling things that she knew were not true, but just kind of hyping. There's that gray area. It now looks like, from what I've read, that that's not the case. She just flat out lied and knew what she was saying was just complete nonsense. And the investor should have known this. So when the Sam Bankman-Fried story first broke, I kind of did buy a little bit of the misunderstood, autistic, on the spectrum genius. He's like Musk. Musk himself says, I'm on the spectrum. It's like, okay, maybe Sam's like that. And he's going to break out of this and he's going to be the next Tesla, SpaceX, something like that. That does not appear to be the case from what you say in your book.
Sam, wow. The story of Sam is such an interesting, fascinating story, aside from crypto, just in terms of his interior psychological motives and how he became what he became. That's why Michael Lewis's book, Going Infinite, barely touches crypto at all. I got to interview Michael Lewis for Time last year. I mean, in some ways, he views crypto as sort of like the sideshow to, a deeply personal psychological drama that was playing out between him and his parents and this company. Sam is exactly my age. He's like the peak millennial. Uh, he went to Stanford. He was like sort of immersed in ivory towers, and then he accrued, $8 billion in the span of a few years. Everybody wants to know, is he a flat out liar? Is he, you know, how much of a psychopath is he? Or was he just sort of well-intentioned but a bumbling figure? This is sort of the narrative he tried to trot out during his trial is, we grew way too fast and I was overwhelmed. I didn't have a good handle on my own company, and that's why there was all these things that were overlooked. I think when we think about Sam, a key part of this story is his the ethical upbringing he was brought up with, and the the ideals of both effective altruism and what he learned on Wall Street, particularly about um, risk neutrality. So his own mother described him as a take no prisoners utilitarian. Just the idea that he was going to be ruthless in chasing the maximum good. And actually, one of his former colleagues from Alameda said a similar thing, is that he had this philosophy that even if he had to hurt people around him, he didn't have a problem with that if it meant that he was going to do the maximum amount of good in the future. He told Tyler Cowen a similar thing on a podcast. Tyler Cowen posed an experiment: if would you blow up the Earth if there's a 51% chance of you doubling Earth and the 49% chance of you blowing up the Earth? How many times would you flip the coin? Risk neutrality, in its crudest form, says you look at that bet, and whichever percentage is more valuable, you're going to want to make that bet more of the time. So he told Tyler Cowen, I'm gonna flip the coin 51%, double the Earth, 49%, destroy the Earth, and I'm gonna do it again. And I'm gonna keep doing it. And he believed, I think he truly believed in this. He believed that he was sort of uniquely positioned to make so much money that could do so much good for the world. And the way that he was going to do that was through ruthless risk neutrality. And that meant borrowing as much money as he could from as many places and taking as many risky trades, as long as the calculations that he made about them came out positive. And he just did it over and over and over again, starting from his career at Alameda and then at FTX. He loved risk, and there were several junctures where he could have taken a safer route, but he just believed that he was sent here to be basically the richest person on earth, and that he was going to give all of that money away to vetted causes, that was going to be massively good for the world, and that crypto was his vehicle for accruing all of that money during that time. When we come to the trial, we see that he still sort of adopting this mentality where he pleads not guilty under the idea that maybe if he gets out, um, and he has the right defense, then he can go back and he can do do better for the world. Because if he pleads guilty and then he's just locked away, and his expected value is just absolutely nothing. And
Expected value. That's
it's clear
hilarious.
that from the trial, he's like, it's the problem that he was caught, basically, that he was going to do all this good, he was going to keep doing such good, but he was caught. He might have cut some corners, but he was really well intentioned. So, and it just, the judge basically chastised him at the end for basically not learning anything and still being defiant and believing that his way was the right way.
Yeah. So let's talk about the psychology of all this. There's deception, lying. The difference between lying and bullshitting. Liars have to actually keep track of the truth. They care about the truth because they're distorting it. Bullshitters just say whatever they say just for the hell of it. They don't care what's true or false, right? So Bob Trivers wrote an important book on this, on self-deception, that the liar is better at it if they believe the lie. So self-deception is a big part of this. So maybe you start off bullshitting and then maybe, okay, now I'm lying. Okay, but actually maybe I do have a case here. Maybe I am right. And then you spin it in your own head. And at some point you really believe it. The cult leader really believes the nonsense he's telling his followers and so on. And he's better at it for that because Bob's theory about this is you don't give off any unconscious cues, facial expressions or body language or whatever that deception detectors may be looking for, and you don't, because you don't give them off because you believe the lie. Okay. So the effective altruism, this has an added layer, like I'm going to save the world. This is like a religious cult leader. Yeah. So speak about that in a little bit. That he believed it.
The effective altruism part of it has been something I've been grappling with for the duration of this whole time. Basically, effective altruism, you try to take a logical and numbers-based approach to how to do the most good in the world. And part of that, for instance, is called earn to give, where basically there are some effective altruists who argue that the best thing you can do for the world is not to go work for a charity, go work for the Red Cross, but if you're good at math and if you think you're going to be a good trader on Wall Street, then you just go get a job in Wall Street, you trade, you make $200K a year coming right out of college, and then you donate it all away to the right cause. And that idea that is actually much more effective in helping the world than doing it yourself. And Sam really believed this, and it propelled him upward and upward. Now, I think there are a lot of people who want to blame effective altruism, the movement, for Sam Bankman-Fried, basically arguing that the way that it encourages people to think about the world is fundamentally toxic. I'm not convinced about that. I think we see, like with any ideology, communism, capitalism, whatever it can be warped by people who take maybe the wrong messages from it or take it to like its most violent end. And I think Sam did that with effective altruism. He combined effective altruism with risk neutrality in this just like really explosive way that most effective altruists wouldn't. So, but now we're seeing this new strain. Like after FTX collapsed, it kind of seemed like the effective altruists were sort of like on the brink of like doing some really serious soul searching and being like, is this philosophy? Is it just rotten at the core? We're actually seeing how massively influential they are right now in this new AI movement with organizations like Open Philanthropy and the way that we're thinking about bringing AI into the world and the ethical concerns of that. Thinking about, well, do we think about how AI is going to affect all the people that aren't even born yet? This is I forget the term for it, but the idea that we shouldn't be
long-termism.
Long-termism, exactly.
Yeah.
the idea that we shouldn't even be focused on the people that are alive, but be making all these sort of calculations in our head about the billions of people that have not yet been born. And so in that way, I think there are a lot of still really influential, effective altruists that are in the waters at Silicon Valley and here in DC, informing how AI will be regulated and thought about. And again, I'm not here to say like, oh, EA is toxic, but I think we've seen that in its biggest test of the most prominent EA, who took the most violent version of EA to a very bad place.
Sam, you mean?
Sam, yes.
Yeah. Yeah. So, yeah, when I first heard about effective altruism, I kind of thought it was more like rational altruism, something like Peter Singer's, the life you can save. And, he has his own organization in which you make donations to, which I've given to, because it's like, you want to make sure your dollars go directly to the people that really need it. You're not paying for buildings and payroll and all the extra stuff that the director gets at the charity or whatever. Yeah, that sounds completely reasonable. Your dollar is going to buy mosquito nets or whatever, and not go pay this guy to fly private to the Davos conference or something. I like that, right? But then, so what you're saying is that you take that idea, which is completely reasonable, and then you just go step after step after step. And here's the move they make that really bothers me: this long-termism. So, say 100,000 years from now, there'll be, 100 billion more people that will live. So the best thing I can do is be a selfish bastard, be Gordon Gekko, go to Wall Street, get a gazillion. And at some point, I will call the United States from my island and give my millions to these charities. And this is going to help the world. I don't know. To me, some of it seems like, sort of covered up greed. Also, but there's a deeper problem with the kind of utilitarian calculus there. Remember the trolley problem? Would you flip the switch? The trolley's about to kill these 5 workers. You could flip the switch and it goes down this other track and kills the 1 worker. Almost everybody goes, yeah, that seems like a good thing to do. Kill 1 to save 5. But would you want to live in a world in which that was the actual metric people used? The counter argument given is, the doctor is working on 5 different patients who are dying, and there's 1 healthy patient in the waiting room, and we can just kill him, sacrifice him, take his organs, and save the 5. No, you would not want to live in a world in which that was commonly done, right? I mean, this is why utilitarian ethics is countered with deontological ethics. That is to say, there are certain rules and values we hold sacred no matter what. No matter whatever the greatest good is, it doesn't matter. You as an individual have autonomy over your body, and the tyranny of the majority cannot take away your rights. That's why we have a Bill of Rights and so on. And it doesn't seem to me there's any way around that. There's both of those competing ethical systems, and it seems like Sam and these effective altruists are trying to do an end run around that with those kind of calculations, utilitarian calculations.
I think Sam, for sure, from my research and my understanding of him, had very little time or respect for that idea of like sort of an innate human value or things that we have to follow. Everything was sort of up for grabs if he was looking at like these galaxy brain calculations in his head of how he could do the best good for the world. And on the Gordon Gekko point you made, this actually played out for Sam, where so he's at his peak in late 2021, he is anointed the youngest, or the richest under 30-year-old in the world, for a time. And there was one journalist who basically tracked his charitable contributions and was like, "You're barely giving any of your money away." He was like, the equivalent is just like an average person stuffing a tenner in a Salvation Army bucket, the amount that you're giving away. And basically his argument, just like you said, was like, well, I'm trying to give away so much money in the future that I have to keep investing it in the present because I'm so uniquely good at growing my money that it goes against, it's counterproductive for me to give now. The quote was, giving is a long-term goal, not a short-term one. So that's another one where, as you were talking about, he was able to sort of delude himself into believing that I'm going to make so much goddamn money that it doesn't really matter if I giving now is actually counterproductive.
Yeah, it's the problem I have with all these kind of thought experiments, particularly utilitarian type thought experiments. Just look out the window. Is that what the world looks like? Like with the are we living in a simulation? Nick Bostrom makes this argument using the same kind of calculation, 51, 49. Somebody's likely to have been ahead of us at least because we're probably in the middle of the bell curve. They will have invented VR, and they'll have such virtual reality that we could be living in one. So, and then 10 steps later, we are living in one. It's like, yeah, but if you look out the window, does that what it look like? There's no buffering, right? There's no pixelation in the cloud, that kind of thing. And, how about just look at there's people suffering right now.
Yeah.
Right now. You could do something right now. And I don't know. This calculation seems to be misguided.
Yes. And the other sort of point, it's not directly related to what you just said, was that Sam was so convinced that I think I said at the beginning of the show that crypto was just a means for Sam. It was just his strategy to accrue money really, really fast, way faster than he was on Wall Street. To the point that, yeah, he created FTX, this exchange, which basically encouraged, in my opinion, some of the worst parts, degenerate parts of crypto, of people using massive leverage to gamble on risky coins. Sam created all of these what we call Sam coins, sort of these like shit coins that whose value was based on just sort of wispy ideas of Sam himself. He encouraged the trading of all of these really reckless and dangerous just like little financial games that people all over the world played on FTX because there was a platform for it. So I think that was a sort of, and now I would say a lot of that is kind of normalized of crypto, the center of crypto really being these money games, these really um, just people living on the edge, gambling, which I encourage them to. They can do whatever they want, but I think it speaks to a bigger cultural thing that's happening right now, where people want that. They want the risk.
Yeah, another thread, like with the NFTs, non-fungible tokens, this is going to elevate artists to be able to, play in the big leagues with the handful that make all the money. There's these power law, scaling problems in all fields where 1% of the professional athletes make 99% of the money, 1% of the singers make 99% of the money, book authors and so on. It's really, it feels unfair to most of the players, right? I had on the podcast a few weeks ago, Aella, this highest earner on OnlyFans, doing cam girl stuff, and she makes like 50 to 100,000 a month at some point. I said, how many other women do this? She goes, oh, most of them make like $100 a month.
Right.
Oh, okay. So you're an early adopter, you do it well, and you capture most of the market. The philosophy behind NFTs and this just general philosophy of blockchain and crypto and all that is that we're going to break through that scaling power law thing in which the elites capture most of the money in market and the rest of us are left just to scramble. And this is going to be a game changer in that front.
Yeah. Can I swear on this show or no?
Yeah, sure, of course, yeah.
The idea of just like fuck gatekeepers, fuck Time Magazine, fuck Sotheby's, all of these elites who are gatekeeping our art, our information. Who said that they could make the rules? We're gonna take back this power because like through Web3, we can sell directly. We can sell directly on these platforms. Sotheby's isn't taking a cut, and we're gonna be able to form our own fan bases that are outside of these predatory middlemen. Very sexy idea, like very cool. And I think at the beginning, there were enough crypto investors who supported it and wanted to, because again, it all fed into this narrative. NFTs are going to democratize art and finance. And so all these crypto investors who had all this crypto to play with because it had skyrocketed so much in value over the pandemic, they were like throwing money to these artists, even if they didn't care about the art at all. But what we found, like studies showed that once again, it doesn't matter, like, or the new middlemen formed, these new NFT influencers who had millions of followers on Twitter and could basically with the flick of an index finger could tell their followers to buy into certain projects, leave others in the dust. And the market hyper consolidated around, about 15 artists, and most of them left in the lurch. And then about a year after the NFT boom, most of the artists realized that most of the investors really didn't care about the art at all. They just wanted something to speculate on. We've seen with every single crypto boom, all these speculators rush in and whatever the new medium is. So it was called ICOs, or initial coin offerings, the previous cycle. And then it was NFTs. And now it's meme coins, which basically it's the same sort of fundamental tokenomics of NFTs, but with the art stripped out. And it's just people trading on memes. People, most of these crypto traders didn't want the art. They didn't care about the art. They just wanted the rush of buying something that might increase in value and then trading it.
Oh, so interesting. Can you give us a little explainer of, of how mining is done for crypto coins, or whatever the right phrases are there? How are they generating this, and why can't anybody just do it? And how come it takes so much electricity?
So we're talking about proof of work mining, which is a specific type of mining that underpins Bitcoin. So basically, and again, it's so easy to go deep into the weeds here. Bitcoin mining is computers running all over the world, decentralized, distributed computers running all over the world, working to solve some sort of math problem by running their servers a lot and then getting rewarded for a Bitcoin, if they solve the equation in the right way. If there are enough computers that are running and trying to safeguard the system, that makes it extra hard for an attacker. They would need so much computational power to get into the system. So it's supposed to be very resilient. And actually, like the energy usage, that's how it's designed, because nobody would have enough power, computational digital power, to overcome the system and overthrow it. So it's just think of it as just like this giant weighty barge that you're just not going to poke holes in it. It's really strong, but it's just like pumping gas out into the atmosphere. It used to be in the early days of Bitcoin that you could just run your own node in your basement and, partake in the system that way. It was like really cool. All of these just single miners across the world contributing to the safety of the Bitcoin network. But the more mining infrastructure you have, the more profitable it is for you. The more, like, the bigger rig you have, the better. So I guess it's unsurprising that now Bitcoin mining is really dominated by these multi-billion-dollar corporations who own these giant rigs that are basically plugged directly into power sources that are just using the amount of energy akin to any giant server farm, your Googles, your Amazons. Um, a lot of them were in China up till 2 years ago. China banned them. A lot of them have moved into the US and specifically Texas. That's where some of my reporting brought me recently. There was a Bitcoin mine that had basically been hooked up to a gas plant on the edge of this town called Granbury. All of the servers switched on. All of these fans switched on to cool the machines, the fans making a noise, a hum, a sort of screeching, vibrating hum that ran 24/7. The people in the town started waking up in the middle of the night. They started going, "What the hell is going on?" They were losing sleep. They were getting migraines. They were getting tinnitus, so ringing in the ears. They were losing their hearing. And so I spent, a week in Granbury, just on this very kind of sideshow of a story, but sort of speaks to that these technologies, they're material. They exist in the world, and it's important that we remember that.
That's crazy. Texas. Everybody I know is moving to Texas. I'm in California. Everybody's going to Texas.
Well, Elon, and I mean,
Yeah.
there's lots of very intriguing reasons that a big business would want to be in Texas. That's why all of these Bitcoin mines moved in. There's cheap energy, there's lower taxes, there's lower regulations. And a lot of these Bitcoin mines moved out to West Texas. They're on top of wind farms. They're out in the middle of nothing but tumbleweed. And so it seems like, it's not really harming anybody out there. The problem is when you put these Bitcoin mines, which are really loud, they're potentially, they're drawing from the grid. And if you put them right next to actual communities without the community's consent, the community is going to get angry.
So the humming is from the fans from the
Yes.
servers to keep them
You
cool.
think of
Yeah.
this data server has over 30,000 computers, and so thousands of fans running constantly. You think of like 30,000 fans, or I don't know what the exact number is, but just like a giant sort of vroom that is traveling for miles. There's a local constable there who's been taking sound readings. Every other day, and he's written over 35 tickets against the mine
Oh my
for
God.
violating noise violations.
Oh,
And
that's
the
crazy.
the company is disputing um they're disputing his tickets in court, saying like, oh, he's not doing the proper type of reading, that like, yeah, it's just not he's not a noise expert. I can tell you that, I was there. I've been talking to people who are living next. The noise is loud. It's sort of immaterial, like what the decibel, if is it 50, is it 60, 70, 90? If 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 thousands of fans are running at 50 or 60 decibels every single night, keeping people awake, disturbing people's cortisol levels, that is absolutely going to have an impact on their health and just their mental health.
They should put them
So
in
yeah.
Alaska or Iceland or Greenland or something where it's cold. Just open the windows.
Yeah.